Hi there, it's Phil C from Brisbane City, and I wanted to put this little video together for you here. And what we're doing is we're taking a look at the Aussie dollar.
Welcome to Star Prosper with Phil C.
On the daily time frame, to the 4-hour time frame, and then to the 1-hour time frame. And this is a process that we do every single day inside the Star Live trading room. So for those of you who are students of mine and you continue to come in and watch me trade the London market open, I'm truly grateful to be part of your lives, and I appreciate every single one of you and the precious time that you do share with me. It's just a special thank you to all of you. It is a simple process that we follow, taken from the daily time frame to the 4-hour to the 1-hour, and I wanted to showcase that trading doesn't have to be overcomplicated. Trading isn't complex, only if we choose to make it so. And this is just a simple process that we follow every single day, and I just wanted to show that it can be clear. Trading with clarity is possible. So let's go to the charts and take a look now at the trading opportunity we have on the Aussie dollar. See you soon. I need a point with the cursor. So Aussie dollar. That is where I'm from down under. So I'm in Australia here, and we are on the Aussie dollar. And today I want to hit record and go through something that those of you who are students of mine, here's the members area. For those of you watching elsewhere, what we're going to do, if I hit education here, what we are going to do is cover some price action, some structure, and some Fibonacci's. That is what we're going to do today. So this is straight from the, excuse me, this is straight from the members area. And right now we're going to run through, a process that I do in the Star Live trading room. And we're on the daily time frame, and you can clearly see just by looking at this, we can see that we have structure already right here in front of us. Okay. And if I drop in a line tool here, and then do a little box here, now we can visually see, after we mark up the charts here, we can visually see that we have retested, remember, Aussie dollar daily time frame, we have retested this area, and when price action comes into this area, price action tends to react. Now this is what's known as structure. The significance of structure is price action tends to magnetize. It acts like a magnet, structure does. Price action magnetizes to those levels. Is that a word, magnetizes? Structure pulls price action into these levels, and you can clearly see that right there. And what I'm doing here is marking up our recent high and also our recent low. So if I zoom in like this, we can see that our recent low is down here at 71.65. So if I go from swing low to swing high, this is the area that I want to pay attention to when I jump down timeframes and look for trading opportunities. So this is our previous low right here, and this is our previous high. Copy and paste this and drag that down like this. And this whole process keeps trading very clean. It's very simple, easy to follow. There's a process that we walk through, and the byproduct of doing that is we get consistent analysis. And what comes about from consistent analysis is consistency in our trading in terms of execution. So if we consistently analyze the market the same way, and we continually trade the market the same way, then we are going to tend to get the same results, right? With our trading. And that's exactly what we do in the live room, and that's what we're going to do right now. It's all about consistency with daily disciplines practice daily. So here is my swing low and here is my swing high. Now I've identified the high and the low of our structure, right? Structure looking left, again, as we just covered at the beginning. Structure here, structure here, structure here. We can clearly see that price action tends to react at this level. Now, price action comes all the way back down. What I'm looking for is a little move right here, right back up in the structure. So let's jump down a time frame, okay? Because we want to look for opportunities where we can get short all the way back down into this level. And if we don't, and we bounce all the way back up to this level, we can look for other trading opportunities as well. So on the daily, we have identified the high and the low. Now we want to predict where price action is most likely to go to, and we'll jump down a time frame, and now we're on the 4-hour time frame. So we go from the daily and then to the 4-hour. And as you can see here, we have our starting point. Those of you who are students of structure know that we have a starting point up here from the high. And then we mark up the chart. We follow price action. We have a move from our swing high down to our swing low. Price action pulls back. Then we get a retest of the lows. Okay. Then we get another pullback. Look left. Structure leaves clues. Have structure here and here. And then price action moves all the way down. Let's zoom in. So it's easy to see. And now price action is pulling back into, look left, structure leaves clues. Okay. As price action pulls back into left, we have our previous support. Copy and paste that. Move that over here. Previous support becomes new resistance. Okay. If previous support becomes new resistance, then we can anticipate price action looking to retest these lows here, looking left, right there, and potentially a follow-on all the way down to our lows right there. So the next question is, okay, we've identified price action and we are trending to the downside on the 4-hour time frame. And we have our lows right here at major structure. Okay. Clean this up. So how is there an opportunity for us to get involved? Well, we can look for a trend continuation trade. And all the trend continuation trade is we take our swing high here down to our swing low. We take our Fibonacci retracement tool. Let's get rid of this. Yes. We can take our Fibonacci retracement tool and go from swing high to swing low. And we can look for a 786. Okay. 786 would be a 2786 trend continuation trade. So at the 786, from our fibs, swing high to swing low, we come back into this structure level. Okay, so this is a really, really good opportunity to look for a short. And this is a trend continuation trade. As price action comes down and we pull back, we would want to take a look at our previous support, which is right here, becomes new resistance. Okay, right at this level, right at this structure level. And we have our 786, so our risk would be at the 113s, that's where the stops would be, right here. And then our targets would be at a retest of the lows, so you're looking at about 2 to 1 for target 1. Excuse me. And then for target 2s, I would take a Fibonacci extension and go from swing high to swing low, back up in. And I would look for a potential move down into the 127 Fibonacci extension. Now, this would be a trend continuation trade, and this is also covered in the members area that I showed previous at the beginning of the video. And that's a really, really good risk to reward setup. We resume recording. So that is one way to get involved in this trade, right? So this is a trend continuation trade. And what constitutes a trend continuation trade? Well, we have our move down, we have a move up, we have a move down, and then we have a move up. Once we get a lower low, lower close right here, below these lows, okay, then we have confirmation that price action is heading to the downside, okay, because once we get this move, once we get a move past this point right here, we're bearish. And the antithesis is correct as well. If we're heading towards the upside, once we get a move above this point looking left, a higher high, higher close, then we can look for opportunities on the pullback, looking to retest the highs and further. Okay, so that is what constitutes a trend. And of course, there are trends within trends within trends, and that's why we use higher time frames and trading time frames and lower time frames. Otherwise, you're going to get extremely confused and very frustrated. So on a daily time frame at the start of the video, we're in consolidation. Price action is moving left to the right hand side. As we drop down to a 4-hour time frame, we identify the highs and the lows at structure. Now we can identify, again from the videos, that we are headed towards the downside because we have our starting point up here, we have an initial move down, we have a pullback here, and then we get a new structure low, okay? We get a new structure low because this low closes below this low, okay? These lows looking left. So this would be a really good trend continuation trade towards the downside. Those are the criterias that meet our rules, and we could get involved in the opportunity. The next thing that I want to pay attention to here is an opportunity on the 1-hour time frame in the form of a bat pattern, which I spotted earlier. So these are our highs. We have an initial move down like this. These are our highs, and then we get a little move up here, and then a move back down, and now we can potentially move back up into this area. Again, we were at the 786, but let's take a look now on the 1-hour time frame with a pattern opportunity. So now we're on the 1-hour time frame, and this would be our intraday to our swing trading time frame. Again, we want to look for opportunities to get short somewhere around this level, okay? So let's take, and we'll scroll in here. Now let's take our recent swing high, okay, right up here. Let's take our recent swing high, and we get a move towards the downside, okay? And then we get a move up, and then we get a press down lower again, and then we're looking for a potential move towards the upside, back up into these highs looking left, okay? Because if we get a move all the way back up into these highs looking left, then I want my stops above our swing high here. I want my stops above here, and I want to look for a potential short opportunity and pull some pips out of the market intraday in the form of a bat right here. So let's take our Fibonacci. I said we were going to go over the fibs, so let's do that right now. Here is our highs. So we want to look for potential shorting opportunities if price action can make it up into these highs right here. Let's take our Fibonacci retracement tool and go from our swing high all the way down to our swing low. So we can see our impulse leg down here, okay, our impulse move, and then we're going to move towards the upside. The minimum of the 382 was hit, right? So this puts me on bat pattern alert, okay? And then we have a move all the way back down into our Fibonacci swing low to swing high. We come all the way just shy of the 886, but we hit the 786, okay? So if our minimum of the 382 is hit, price action pushes all the way down here and does not move past A, then we have condition 2 of the bat pattern as well. And now we're looking for condition 3. So this is a move that we want to see all the way up into an 886. If price action can move all the way up into the 886, then we can look for selling opportunities into a 382 and a 618, or potentially all the way back down into these lows, and potentially all the way back down into that structure level looking left, giving you an insane risk to reward profile on this trade. So the D completion is at the 886. So drawing a triangle tool, X to A to B, B to C, and C to D. So our potential shorting opportunity would be at the 886. Our stops would be at the 113, and our targets would be at a 382 and a 618. So now we're on a 1 hour time frame, and we've got opportunities on the 4 hour, and now we have an opportunity on the 1 hour. So if price action can move up into a D point completion, then we can sell into our targets, which is a Fibonacci retracement from our swing low all the way up into our swing high. Okay. So again, we're looking for targets at the 382 and the 618. And we can draw in boxes here to make it more visually appealing. So right here. And we use the if-then syntax. If price action does this, then we do that, right? So if price action comes all the way up into a D point completion, then we can sell it in a target 1 and target 2, okay? So we have a really good risk to reward profile on this potential bat pattern trade. And then you also have potential targets on a 4 hour. You can use the bat entry as potential targets towards the downside and potential targets even further using a bat for your entry. The main point that I would say here is that anything that you do decide to trade, please make sure that you actually know that what you were trading actually has a positive expectancy. Because if you don't know that, then you need to stop trading immediately. Because really what that's saying is you don't know that what you were trading in the live markets, if you're trading in the live markets, you don't know that what you were trading actually produces your return over time. So anything that you do decide to trade in the live markets, please, please backtest that strategy. You need to know your numbers when it comes to trading. Because trading is a business. And if you want to return from your business, we have to know our numbers and we have to track and measure our performance. And then we have to we have to be routined and come in at the same time every single day, go through the same exact process to get that predictable outcome that we have. Now, I know past performance is not indicative of future events. Yes, and over time, strategies tend to change and price action evolves and human behavior, we have to adapt to those changes. I understand that. Even more so that you need to be backtesting. Even more so that you need to know your numbers. You need to track and measure against your backtesting numbers. And keep testing new strategies that you find through trading the live markets. And you can only do this if you have a process that you can follow. Because what you can't track and measure, you can't grow and improve upon. The cliche saying, right? Those who fail to plan to fail. I almost forgot the saying. And that's exactly true with this. You must have a trade plan. This is a trade plan. It has, right here, my rule set, my criteria, my process, my routine, everything that I must follow. Because at the end of the day, at the end of the week, end of the month, end of the year, if I don't have that, then over time I'm not going to be successful at this. So you must have this if you want longevity in your trading. And if you're watching this, I'm sure you're passionate about trading and that you want this as a profession for you. And it doesn't have to be overcomplicated. I really want to get that message out there, because a lot of people are trying to trade the live markets. They don't know what they're trading actually produces them a profit. There are simple steps that you can follow. You can put in the hard work. And you actually can finally start getting some results with this. But at first you need to be educated. And I wanted to put this video together to show you how simple it can be. It's not easy. Easier said than done, right? But it can be a simple process that you can follow. And this is a skill that anyone can learn. Right? So what I'll do is that in the description of this video, if you have made it up to this point, if you're still watching now, I will put a Google form link in the description of this video. And then we can get on a call together and we can organize something for you that is tailor-made to fit you, that you can go through at your own time, follow the process, learn the basics, learn how to read a price chart, learn the ebbs and flows, so learning the language in the markets, learn a strategy, test that strategy, backtest that strategy, see your results, put a routine, and then go out and trade the live markets with it. And then finally get those results. But it requires putting in the work. So if you would like to do that, then you can click on the link in the description. Get in touch with me and we can put that together for you. And if you go through those steps and you follow the process, then results in trading is absolutely inevitable for you. You can make this work by putting in the work, right? So jump down to the 1 hour time frame. We've identified structure. We've identified what price action is doing. We jump down to a lower time frame, and then we can use structure, price action, Fibonacci's, and we can draw up a pattern here, potential pattern opportunity, And then by using the if then in our plan, trade plan, if price action moves all the way up here, then we have permission to sell the market. We have permission to execute. Because price action allowed us to do that. Right? Again, just wanted to showcase that this is a process that we go through every single day in the live trading room. Until next time, be safe, enjoy life, and I'll talk to you soon. Thanks for watching.